Come on in, sit back and relax. You're listening to episode 282 of the Wealth Tech Today podcast. And I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. This podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. And if you notice, the audio sounds a little different. It's because I'm on the road. I just left the Future Proof citywide conference in Miami Beach, and I'm making my way through Florida. So the audio is a little bit different than my normal podcast setup, but I'm proud to talk about our guest for this episode was Robb Baldwin, founder and CEO of TradePMR. Some of the key takeaways from this episode include TradePMR's acquisition by Robinhood for $300 million, which we spoke about. Got some Robb's opinion on that. Robinhood's goal is, of course, to enter the RIA space, leveraging TradePMR's expertise and Robinhood's 25 million retail customers for their referral network, which they hope to build. And they believe their key advantages are Robinhood's modern tech stack, UI, UX, and appeal to next-gen investors. So clearly the tech stack is an important part of combining Robinhood's and TradePMR's. And here at Ezra Group, we have seen thousands of tech stacks across RAs and broker-dealers. And let me tell you, most of them are loaded down with tech debt. So tech debt can act like an anchor, holding down your RAs efficiently and ability to scale. If you want to free your firm up for exponential growth, you need to run, not walk to our website, ezragroup.com, and click the golden Contact Us button on the homepage. The experienced team at Ezra Group can evaluate your current tech ecosystem, deliver targeted recommendations, optimize your existing systems and operations, even run an RFP, and help you implement new software to get your firm to the next level. Ezra Group just makes tech stacks better. You can take advantage of our free initial consultation by going to ezragroup.com. Now, a couple of housekeeping chores. Please subscribe to this podcast wherever you listen to podcasts so you don't miss an episode. Check out our sponsor, the Invest in Others Foundation, at investinothers.org. If you are a software vendor in the wealth tech space, please go to our vendor portal at ezragroup.com/login or /register if you haven't registered yet, and register for your product to update your integration information in our portal and update your wealth tech integration score in the process. Now, let's kick this thing off.
Here we go. I'm going to introduce our next guest. It is Robb Baldwin, TradePMR's founder and CEO. Robb, thanks for being here.
Hey, it's a pleasure to be here, Craig.
It's good to see you as well. And congratulations on the news. I heard I'm the first interview after the deal with Robinhood has closed. Congrats.
That's correct. We closed yesterday. So yes, good to be with you.
I'm really glad you're here. And where are you calling from?
Oh, we're in Clearwater, Florida.
That's a beautiful place. Spending more and more time in Florida these days. So for people who don't know, before we get started on the acquisition and all the other questions we have, let's do this a quick 30-second elevator pitch for TradePMR.
Certainly. TradePMR has been around now for 26 years. We are really a two-pronged approach in everything we do, and that is, we want to provide great technology to advisors, and we want to have the best quality customer service. Those are the two legs we stand on. I am a former advisor. I was an advisor for years. I custodied assets at all the major players before founding TradePMR. And again, those are the two things that I cared about when I really delved into this industry, because I figured out really quickly the RIA industry is really the best financial segment that exists for anyone to create an occupation and be an entrepreneur and to grow a business. But the two things that are really, really critical for entrepreneurs is to have vendors that have great service levels and great technology to provide them, ongoing support. So those are the two things we try to provide at TradePMR, and I feel like we've done a really good job at that over the last 26 years.
As a consultant, I could certainly say that great ongoing support and great technology are two things we look for when we're helping clients pick vendors. And so that's certainly on our list. But let's talk about the deal that just closed. $300 million Robinhood acquisition surprised, I think, many people. It sort of came out of left field. No one was expecting. No one would have guessed on their bingo card for last year that Robinhood is getting into the RIA space. So can you tell us how the deal came about after 26 years running TradePMR? What convinced you it was the right move?
Yeah, I think everyone was surprised. Yes, I was a little surprised even when I got the phone call. So, it's one of those things you look at and you kind of go, that's an interesting, twist. But there's three aspects that really sold us on the deal. And that is number one, we've all sat around and tried to figure out how to create the greatest new account opening system possible for our advisors. And the conversation always ends up if we could only do what Robinhood did, we'd have 100% of the market share. It'd be incredible. They hit the ball out of the park when it comes to UI and creating an experience that retail clients love.
Mm.
And so that was step one. And step two was just the technology underlying Robinhood was so different than anything we've ever seen. You're a technologist as well as I am. You understand the back offices that all different financial institutions have to layer their businesses upon. And to see a company actually create theirs from scratch, from zero, was revolutionary to us. So when we took a deep dive there and we really figured out that everything they've created pretty much lives in AWS, and of course, everything we've created on the upper layers of the older technologies exist in AWS. It's going to create a really unique experience for us to be able to develop the latest, greatest technology for advisors quickly, efficiently, and again, with modern technology, with securities in place and things like that, we fight every day today dealing with antiquated technology. So I'm very excited about that in the long run. And the third, of course, is the referral program. We've all been to conferences over the years. We all have sat around and listened to speakers ask us the question, what are you doing to reach the next generation? No one has ever had an answer. Different technologies have been created to try to reach that generation, to try to hone those in, try to solve the problem of what happens if one spouse dies and the other spouse doesn't have a relationship with the advisor. And no one has ever solved the problem. And the truth of the matter was, when I saw what Robinhood had with 25 million customers that are the next generation, that are fanatically excited and sold on that brand and that experience. And when I questioned them, they said, there's no way I would ever go to another platform and deal with your experience. That would be absolutely the last thing I would ever want to do. So it made me realize that the clients live there. They're the ones that are going to inherit the assets. We don't even have to chase them now and try to convert them like brokers have done for hundreds of years. We just get to deal with them where they are. And that to me is a home run. And it's a solution that I just felt like was untapped and undiscovered in the marketplace. And it really is going to create a real windfall, I think, for the RIAs who tap into that market.
So you've moved into the next question about the new next generation. So I'm a Gen X, so clearly I'm not the target of this. And you talked about Gen Z and millennials, and even the next generation there. Those are the core of Robinhood users. But Robinhood users are not just a different demographic; they're also more transactional and not thinking the same as the typical RIA client. So it's sort of a mindset shift as well. So how do you envision that sort of cross-selling opportunity for people who aren't expecting that type of product?
I think that's just a normal maturation of time that happens with all of us. I was more of a trader when I was younger, and today I'm more of an asset allocator, as you get older. And I think, as you accumulate wealth, different reactions happen in your mind. When I was younger and I was single and I could afford to have the time to do research and study stocks and play games and that was one thing. You get married, you have kids, you have a job and a career, your time element to be able to do those kinds of things, even your interest kind of dissipates and you really start to realize, hey, I've started to accumulate a little bit of wealth. I need an advisor. That's where the Robinhood clients are today. There's a lot of clients in that realm today. And they're starting to raise their hand currently and say, hey, look, I'm looking for an advisor. They've notified Robinhood. I would like to have an advisor. So I think there's a large audience already, and that audience is just going to continue to grow as this wealth cycle starts to, snowball. And, I think we're about 12 years away from the peak of it. So, 12 years, Craig, goes by so fast, it's crazy. And I think we're just now going to be in the beginning of it and be able to start really create some really cool technology around it to make introductions happen, to make experiences happen. And the natural life cycle of the end client as they mature and want financial advice, we'll be there for it and ready to handle it.
There's been a stream of acquisitions, and every year we see more and more of these, and a lot of them sound good on paper, but they've sometimes failed to deliver on the promised value. And there's never an announcement. There's always the announcement about the acquisition, but never an announcement about, hey, we didn't quite meet up to what we were going to do when we had this idea. And with two such very different cultures, Robinhood's very different culture versus TradePMR's culture, do you have any milestones, and how do you plan on acclimating those?
Yeah, I mean, the first milestone, of course, is to get the referral program out the door and put in place. And so, we've got some real guardrails around that, and I've already started some serious work efforts around it. So we're very excited to continue those work efforts and hopefully have a lot of information and news to spread around at our conference about the more details. And our conference, I think, is the last week of May this year in Tampa, Florida. So we're real excited to be able to make more announcements then.
I'm waiting to hear those. I'm very excited about that. Speaking about the integrations and the connectivity between Robinhood and TradePMR, uh, there's been some talk about Robinhood having to rebuild a whole custodial platform to support RIAs, whereas now they don't have that, and that could take multiple years, as you know, having built TradePMR over 26 years to get to where you are. How fast do you think Robinhood can build out their own custodial platform, back-end services, and all the other areas or things that are necessary for that?
Well, first thing you need to understand is they have 25 million customers on their current custodial platform right now. And again, they built that from scratch. So, that is up and running, and they did it faster than anyone else has ever seen done. It's actually for really the first time anyone's really ever done it.
Mm.
So, they've got milestones that they want to hit on trying to expand that and create that long term. I would guess it's going to take numerous years to accomplish that, just like everyone else. And that's fantastic. We're prepared for that. And of course, we're still remaining with Wells Fargo in the meantime. So, that's true. We have a great partnership with them, and we're continuing to delve in and try to discover new things to do with them as well. So, as we've got that covered for a long time to come.
Do you see more companies doing what you did when you started out, partnering with Wells Fargo, and I see it as sort of a hybrid, right? Where you're a technology company that also offers custody. Do you see more firms saying, "Hey, that's a great idea. Why aren't we doing the same thing? Why are we trying to sell technology at a per seat license? Why not partner with a custodian and sell it that way?"
Yeah, but I think that day has probably run its course, to be honest with you. It's a whole different world today. And, when I started in the business, everyone was trying to become self-clearing. And, I'll use these terms and hopefully everybody understands what they are, but I mean, to be self-clearing, but the problem is when you deal with RIAs, if you are self-clearing, you better be profitable, number one, and you'd better have a lot of capital. Because RIAs really do demand a lot of capital and need to have a custodian that has a lot of capital because they're doing lots of large trades and so forth. So it is very capital consuming. And that's really kind of the issue we're seeing today is we need smaller custodians to thrive. So that there are more vendors in our space. If we get too heavy and dependent on two or three vendors, we're putting our entrepreneurial businesses in their hands from service levels and technologies and support and so forth. So I'm really hopeful a lot of the smaller custodians do crank up and are more successful and do become profitable because it's very, very important that happens. But I think there's going to be more and more players trying to enter the space as there is right now, and it's really, really challenging to do it unless they're already large. Otherwise, if they start from scratch, they are getting a lot of small customer accounts. But of course, you're not going to see billion-dollar firms say, "Hey, yeah, I'm going to give you $10 billion" if you're not
Mm.
profitable yet. That's the real challenge. So that's why we went the route we went. Of course, we started back, when 2008 hit us right around the corner, 10 years after we started, and that was a big deal. And you had to have a custodian at that point in time that
Mm.
could, stand the test of time and stand the financial wherewithal that, needed to be in place for advisors. And, Wells fit the bill for us then. They came out of 2008 unscathed, and they did a great job there. And they were a great partner for us and have been all these years to allow us to really run their RA division, for the last, 6 years, and also, be able to do our own thing.
You'd mentioned earlier in your intro about your platform running on AWS and Robinhood's running on AWS, making it
Mhm.
easier to integrate and connect your platforms. And you've also been an outspoken critic of limitations in wealth management technology, noting that a lot of the core systems we rely on were built
Yes.
in the 70s and 80s. So do you see Robinhood's tech? I mean, you mentioned a little bit, but how much of an advantage is their tech platform having been built just in the last 10 years?
It's words can't even describe the advantage that they're going to have 5 years from now when everybody and their brother is going to try to get into all the different aspects of financial services that the next generation really is demanding. Um, I like to kind of point people to, some of the technologies that are in China and Hong Kong and Europe, currently. Where you get a lot of customers that are using one piece of software to do everything from investing in stocks and bonds to investing in crypto to doing their payments between their friends to paying their bills to depositing their paychecks. These all-in-one apps are ruling the world everywhere in a lot of places, except for in the United States. And Robinhood really is the only vendor in the United States, the only company that is building to accomplish that for the time when it's ready here in the US. And I think all the other ones are going to be left in the dust because it's just too hard to try to piecemeal technologies together to accommodate that with all of the different antiquated systems we have today.
All-in-one apps has been a number of companies that have tried to duplicate that. That's very popular in Asia with WeChat and others that you
Yes,
can do
yes.
everything inside one app. But even inside financial services, it's hard to find an all-in-one app that can handle everything that the average person does. So do you see Robinhood branching out into banking and other areas of finance?
I wouldn't say banking, but then again, um, you know, I don't know that we're going to be looking at banking the same way as we do today, 10 years from now.
Mhm.
I think people are getting, in Europe, they don't use, a bank to where they walk into a bank and get a checking account and so forth. They can use, kind of an alternative bank kind of product like that and have their checks deposited there. They can have a card issued on it. They use their phone when for their payments. They pay their bills on these apps. It's kind of like a micro bank, but that's not a bank. And in the process, they're doing loans, they're doing all kinds of unique things. So I have a feeling that's where we're going to end up going down the road. And it's going to be that all-in-one system that's going to, win the day.
In another interview, speaking of all-in-one systems, you were talking about Revolut, which
Hmm.
is an app based in London that has 50 million users. And as you mentioned, you can do all those things: buy crypto, buy stocks, pay your bills, send friends money, all in one app. Uh, so Robinhood seems like they could be a good candidate to add some of those to the feature. Like, why can't I pay my bills in Robinhood?
Right. Yeah, it wouldn't surprise me. I haven't heard that on the roadmap as of yet, but they've gotten into the credit card business, and that's fantastic. And they're using the digital card system for that to support the family, which is really unique. And Vlad's spoken a lot about that. And you can start to see how this is starting to permeate not just to individuals, but to family members as well. And it's kind of growing. And his vision is to be able to transact business in all sorts of realms, not just trading anymore long term, but wealth management, crypto, all different types of things going forward. So I think that's going to be the direction.
Do you see crypto as, we've seen the ups and downs of crypto. It was hot for a while. Everyone was talking about advisors, allocating to crypto. Then it sort of died when things crashed, and now we haven't heard much from it. Although it started to pick back up again. And with Robinhood making so much money off of crypto, do you see that changing? At least the clientele that you will be targeting will be more open to having crypto as an allocation in their portfolios.
I think that generation, yes, is definitely more apt to wanting that. And, I think we're starting to see it even in our space. I hear people planning on being, SMAs for, different meme coins and things like that. So, I think that's gonna start to branch out. It's going to be interesting to see in the next few weeks as we attend some technology conferences where there's some vendors there that show up that, are unique to that and are really starting to pitch that in their offerings. But I think that's going to be definitely something that the next generation is going to clamor for.
This isn't in the list of questions, but I wanted to ask it to you that I've always
Sure.
felt that we approach, in our industry, we approach client interactions on the tech, like a digital client interaction, from the opposite of how every other industry does it. And Robinhood's is a good example. For example, when we talk to advisors and they see their clients have been on the portal too much, they get nervous. Why is it? What's wrong? Why are they on the portal so much? Why are they checking? No other industry does that. Every other industry wants more interaction on the portal, whatever your app is. We want you spending all your time on our app. But advisors see that as a problem. Most of it's because there's just nothing to do besides check your balance, right?
Exactly.
And look at your holdings. So, do you see Robinhood changing that and building out more of an interesting, more of an engaging experience for clients on the RIA side?
Yeah, I would hope so. I would think that's the direction they're going, and I think they've kind of already accomplished that with what they've created even so far. Um, People look at it and have said it's an entertaining app to some degree. I mean, I find it really entertaining to be able to see all the different things you're able to do currently on Robinhood. So as those things expand and you have different things to learn about how to do different variable things, such as traded index options or anything like that you want to learn more about. I think teaching tools and so forth like that. If you're spending time on the app to learn how to do things, how to hedge better, how to be more informed about your trade, how to have more information about your decision making, that's all good for the end user.
Before we
Very
run out of
different than
time,
what we would worry about in our advisor clients, which we know if they're on our site, they're doing one thing.
Mhm.
They're checking their balance and they're figuring out whether they're making money or they're not. So
Yes.
yeah, it makes advisors nervous.
Yeah. I mean, maybe some gamification of things like budgeting and other things that we always wish our clients would do more of, or long-term
Certainly.
planning, right?
Yeah, financial planning and changing to the financial planning. We know our clients are usually not keeping up with all the aspects of their lives and entering changes as changes occur.
Mm.
So if we could create methods to where that could be more entertaining for them to do, and that would happen more naturally and even provoked via apps, of lifestyle changes and things like that have occurred based on information from credit bureaus or, and anything and everything that we could get information from would be really, I think, something that could drive a better experience long term for clients that would also help them get to the end result.
I wanted to ask you about the Robinhood brand. So there's been some talk that advisors see Robinhood because of their reliance on short-term trading and their gamification. And there's been obviously, once you're successful, everyone's going to throw mud at you, right? So Robinhood's been incredibly successful, really changing the industry to no commissions, but also there's been some criticism that they're encouraging trading when and churning of accounts, and clients are spending money and losing money they shouldn't be. So that brand name, in some respects, on the advisor side, isn't as strong as the TradePMR brand. So you think the TradePMR acquisition is Robinhood's attempt to change that and sort of burnish their own brand, that hey, we're not just we're not out there as an arcade. We're really thinking about long term. We really want to be taken more seriously.
Yeah, I don't think it's just the acquisition of TradePMR that is driving them that's a focus. I think they're doing that all the way through in everything that they're trying to accomplish. They've brought on multiple team members that are experts in their field that have lots and lots and lots of experience. They've brought on in their chief legal counsel, Dan Gallagher, as well as Steve Quirk from TD Ameritrade, who helped create Thinkorswim. They've got a lot of very, very experienced people who have brought on numerous team members from their past, and they've really beefed up, and they've really kind of circled the wagons with the best of the best talent to get to where they are today. And I think they are trying to reinvent themselves a little bit and put a lot of things in the rearview mirror that happened to them back in the days of 2000, 2001.
We're almost out of time. I just want to give you one last question. So this year it was going to be a big year from you now that the deal is closed. What can we expect? Do you have anything you can share that's on your product roadmap for the rest of 2025?
There's a lot on our product roadmap. We're really trying to enhance, again, the client experience for our current users. So that's another item that we're going to try to roll out, is to make a great UI experience going forward for the advisor's customers. We feel like that's been a weakness of ours in the past. So we really want to enhance that experience. So that's another thing we're going to roll out, as well as, of course, the advisor referral program.
That is fantastic. We're looking forward to all that. Rob, thanks so much for being here. Where can people find more information about TradePMR?
At TradePMR.com. So feel free to check us out. And of course, we hope to see anyone and everyone at our conference as we create more news at the end of May.
We're also going to be at the T3 conference next week.
Yes. Yes, we will.
Rob, thanks for being here.
Absolutely. Craig, always good to see you.
Hey, it's Craig again. Here are my top 3 takeaways from this episode. We talk about the acquisition, and they really believe that the 25 million next-gen customers who will inherit wealth need advisors, and they believe they can refer them through the TradePMR network. So that could be a huge benefit to this acquisition. Now, there are some integration challenges around launching the advisor referral program, and they plan to announce more details at the TradePMR conference in late May, which happens to be in Tampa, which is where I am right now. And I also believe that their modern Amazon Web Services-based architecture provides a significant edge. And one interesting thing I thought that Rob mentioned was that they're looking to build an all-in-one financial app like WeChat in China, but here in the US, covering investing, payments, bills, and etc. I would really love to see that happen. And that's it. You've reached the end of another episode of the Wealth Tech Today podcast. Thanks for listening. But before I go, please go to our website, ezragroup.com, and scroll to the bottom of the homepage and sign up for our newsletter. Once a month, you receive an email chock full of wealth management goodness, news, and information. You will not be disappointed. Thanks again for listening, and talk to you all again next time.